And welcome back, everyone, to Tax Talk Live. We are live on YouTube and other social platforms. And we want to thank you all for tuning in with us live. And believe me, we have a treat in store for you all this Saturday. So, without further ado, we're going to go ahead and jump into it. You all already know what time it is. And those of you who are joining us for the very, very first time, welcome to the platform, and also be sure to follow along, and we have a treat in store for you all. So, Frugal Millionaires family, guess what? We're excited to welcome a very, very special guest on today's episode of Tax Talk. She brings a wealth of knowledge as well as a unique perspective to our discussion today regarding taxes. So, having spent nearly a decade traveling the globe, she has worked with some of the world's leading companies, including Floor, KBR, NOV, among others. Her international experience has not only enriched her professional life, but has also equipped her with a very deep understanding of diverse financial landscapes. So, in addition to a very, very impressive career abroad, she's a licensed real estate agent in the state of Texas and a certified project management professional. Her entrepreneurial spirit, as well as expertise in real estate, adds yet another layer to her multifaceted career. So her journey from the global stage to entrepreneurship embodies the spirit of versatility, adaptability, making her perspective invaluable when navigating the complex world of taxes, both domestically and internationally. Whether you're an entrepreneur, a real estate enthusiast, or simply looking to expand your financial knowledge today of taxes, her story and expertise are sure to inspire and inform each and every one of you all. Please help me give a warm welcome to our dear sister and frugal millionaire, Miss Valerie Smith. Welcome to the
Hi.
show, Valerie.
Thank you for that amazing welcome, Brieon. Thank you. It's my pleasure.
Well, good morning. I know it is bright and early there in the state of Texas, and we just want to say thank you first and foremost for tuning in and just being a guest on today's show. So, you know what we're talking about taxes. I know you have a lot of experience, and I know you have a lot of insight that you have to share with our audience today. And so we're going to go ahead and get right into it. So we're actually talking about how we can make taxes, personal, individual income taxes, more beneficial for people. And so I just want to ask you while we're going ahead and getting prepared to jump into this, like when it comes to taxes, I know you worked around the world and
Yes.
also, you're an entrepreneur. So when it comes to taxes, what's one piece of advice you'd like to share with everyone in terms of their individual income taxes?
Um, the one thing I think is most important is keep records and keep receipts and make notes of things. So one of the ways that I do that is, receipt paper, the ink on it, it definitely it gets old. So what I do is I take a picture or a copy of the actual receipts and I file them away monthly, throughout the year. So things that I may think that will be important when it comes to tax time, or just it may or may not be important, but every month, January, I have receipts. I have take notes of things that I spend and things that I'm doing, charity and things of that nature. And I just file it away every month. So keep notes and keep records.
Absolutely. Well, that's very, very, Valuable feedback. I mean, you couldn't be more spot on with record keeping. I mean, I always look at it like what you document or what you record, that actually gets done and it actually gets
Absolutely.
recorded and filed within your return. So that's definitely valuable insight. So what we're going to do, we're going to go ahead at this time, jump right into where we left off last week. And so we've kind of been just starting with some of the basics, the ABCs of understanding forms. So we're going to go ahead and put up our information on the screen where we're showing individuals how we navigate the U.S. income tax system more effectively. And on last week, we actually started out with a number of forms and we focused mainly on the W-2 and the 1040. And so there was a homework assignment that we gave to everybody, and I trust everybody did their homework. I trust that everybody did that.
Let's
So
see.
homework was to go and take a look at the 1099 miscellaneous as well as the 1099 NEC and the W-4 form. So as you all can see on the screen here, we're going to be taking a look. We're going to dive into the W-4 form. But for those of you who are joining us for the first time, we're going to do a very, very quick recap. So we're going to go very quickly, but we're going to proceed to catch up on the W-2 as well as the 1040 on some of the key points. So first, starting off with the W-2. And I know, Valerie, you've seen a lot of these W-2 over the years. But you know, one common thing that I've noticed when it comes to the W-2 is that a lot of times you can have a mistake or you can have an error in your
Yes.
W-2. And so what we always advise is that you fact check your W-2 with your last earnings or your last pay statement that have the year end values so that you can cross reference. And so any insight here, Valerie, that you want to share when it comes to the W 2?
Just to piggyback off what you said, it's absolutely imperative because, as you know, when mistakes happen, tax returns are held up. And I mean, they can get held up for months at a time. So, spot on, Brieon. I like that.
All right, moving right along. So we see here we have highlighted the federal income tax withholding. And so that's what's circled or highlighted there by the green circle. And so we want to make sure that that number, because we're focusing on how can we reduce our federal income tax and bring home more of that money. So we see here around $15,000 has been withheld in federal income tax. And so let's move on now to the 1040. And so as you see here with the 1040, this is the actual 1040 of an employee who actually earned $96,000. And so this 1040 is going to contain personal information. As you all can see here, this is names, this is social security numbers, this is also addresses, as well as this is other additional pertinent information like your state as well as your zip code. So, very, very important to make sure that your information is accurate. Very, very important to make sure that not only is your information accurate, that your information matches from your W 2 over to your 1040. Now, I'll go ahead and bring you in again, Valerie. I know you've seen a lot of the 1040s over the years. And so, is there any particular thing that stands out or jumps out when it comes to the 1040? Any specific advice that you'd like to share regarding the 1040?
One of the things that I saw in the past that can cause a problem is your marital status as well. So make sure that your marital status and your current marital status, along with what you're claiming on your 1040, match. I know that depending on that tax year, you might have gotten separated, you might have gotten divorced, or you might have gotten married. Just ensure that those things match, because again, that can be held up as well.
Oh, that is awesome advice. I mean, just to kind of piggyback off of that, your marital status can make a huge difference in
Hmm.
terms of deductions. I mean, even as simple as the standard deduction, which we're going to touch on that just here shortly, but the standard deduction is different for single filers versus those who are married, as well as those who are married and filing separately.
Hmm.
So that's very, very important. And thanks for chipping in that advice, Valerie. So also, in addition to that, you want to make sure that you look at section number 7 or line number 7 where it says wages. Your wages on line 7 should match with what's on your W-2. So very, very important where you see the green arrows there. You want to make sure that you focus on having that information match. Now we jump to page 2 of this individual's 1040 form 1040, and you see here we start out with the adjusted gross income. Now this is very, very important for a lot of folks when it comes to the adjusted gross income. And so basically, I'll make it very, very simple. The adjusted gross income is just basically your total income minus those deductions and adjustments that you are eligible to take. And that's what gets you to your adjusted gross income. Very, very important to make sure you don't leave any money on the table and you take all eligible deductions as well as any required adjustments. And next, as I just mentioned, we talk about the deductions or the standard deduction. And so here you see the next green arrow that we have on line 40. And so this is very, very important for a number of reasons because you have the option of taking a standard deduction as well as itemized deduction. So depending on your individualized financial situation, whatever is most advantageous for you, then you should make sure you proceed accordingly. Now, also very, very important is that when it comes down to the deduction, if you are having itemized deductions, we're going to be looking at how your itemized deduction, which here we know this individual had $19,000, a little bit more than $19,000 worth of deductions that were itemized deductions. And we're going to show you how those itemized deductions can be used in future years to help you on the W-4 to reduce the amount of taxes that's being withheld from your weekly, bi-weekly, or monthly payroll so that you bring more of that money home and less of it is being taken out for federal withholdings and eventually a refund that comes back at a lower value due to inflation. So make sure you keep in mind the standard deduction or itemized deductions that are applicable to you. Anything you want to go ahead and chime in here, Valerie?
No, that those itemized deductions are key. So spot on, Brieon. I like it. I'm with you. No, I piggyback off everything you just said. Great advice.
All right. So moving right along, we look at the next line, which is line number 43. And so we look at taxable income. Is there any taxable income? And we see here it's a little bit more than $1,200 here. And so once we get down again, down to line number 62, we see that same amount that we saw in the W-2. So when we're looking at the 1040 and we're looking at line number 62, we see that amount of federal withholdings of $15,797. And so again, making sure all of your information matches is so important. And then finally, on here on page 2, we've highlighted this last section. This last section is basically where the money comes in at. And that's where you have your refund information. And so you see a number of green arrows that we have there that's highlighting the amount of refund that's due to you, which this was a full refund of 15,797. But also you see there where the bank account details, and that's very, very important to make sure your bank account details are accurate. That's your account number, that's also your routing number, and also make sure you check the appropriate box for account type. Either that's going to be checking or either that's going to be savings. So make sure that this box is very, very correct. And so one thing that we always advise is that you review your return thoroughly before you sign off on it to be either e-filed or either the paper copy to be mailed. Make sure that you review it and you review it thoroughly. So just moving right along, that kind of finishes up the little recap that we wanted to go through. And I know we kind of went through that quickly, but we're going to be opening up here a little bit sooner than we did last week for questions. We've received a ton of questions. And so we want to make sure that we're able to answer all of you all questions and give you the right information and point you in the right direction. And so we have a number of questions that we've already received from last week that we're going to try to cover in addition to your questions for this week. But anyway, this page is our favorite page. As we stated last week, this is a reference page. You can find any forms, any information here. Very, very valuable. So let's go ahead and jump into why we are here today. And so we're going to be talking about the W-4. And so the W-4 is basically the employee's withholding certificate. Now, you complete this W-4 so that your employer can withhold, so that they can withhold the correct amount of federal income tax from your paycheck. Now, why is this very, very important? Because you want to make sure that you're reducing the amount of federal income that's being withheld. You're only having the very, very bare minimum of what's required to come out of your payroll, either weekly, bi-weekly, or monthly. And so, Valerie,
Mhm.
I know you've had a chance to, work both, domestically in the United States as well as abroad. And so, have you had an experience whereas, with the W-4 withholding, it may be a little bit different for
Mhm.
international withholdings versus stateside?
Oh, absolutely. Well, as you know, on the international sector, um, before I think the first 96.5 is tax deductible. So it was very advantageous for me to go in at this 6 month period, or once I reached that 96,000 to go in and adjust my W-4. So I would do that sometimes so that I can level out my tax exemptions and things of that nature. So absolutely, it's a difference working stateside versus international, because you just, like you mentioned, you want to maximize as much as you can.
Absolutely. And I think it's very important. And I want to say this to everybody because I mean, we're going through these forms, and these are some of the key forms. There are a number of other forms that we're going to touch on, but I want to make sure you all really get this. When it comes to the W-4, you should be considering, if you're not doing it, consider completing a W-4 each and every single year, or whenever your personal or financial situation changes. So if there's a personal situation that changes, that could be you moved, so you need to update your address. That could be, as we talked about earlier with Valerie mentioning, your marital status may change, and so you need to update this. Or also things just change in your financial situation, and so you need to make sure you adjust your withholdings accordingly. And very, very important here as well. And so when we look at the W-4, very similar to the W-2, you want to make sure your name and your address information, your social security number, all of that information, you want to make sure it's correct and very, very accurate, because this information is going to your employer, and ultimately your employer is going to provide a W-2, which they provide that as the employer to the Social Security Administration, which in turn provides it to the IRS. So making sure that your information is correct, it's accurate in all of your tax documents is very, very key. And so as we look at this, again, you see some of the same information. You see the arrows here for address, marital status. Now, I want you all to jump down with me. And I talked about this last week, but now you can actually see it on the screen when we're talking about section 4B. So this is where it really becomes a benefit for you. So if you've itemized, if you were eligible to itemize, which means that ultimately your deductions are higher than the standard deduction, and you were able to itemize, then that's where you would put that figure here. And why you want to put that figure here is because you want to make sure that that previous return, and I want to put it on the screen here. You can see here we have both of them on the screen, where your previous return, you want to make sure that 19,300, it's mirrored. Why? Because now it's going to reduce the amount of federal withholding. So now, based off last year's filed, approved, and received refund, now you can actually put in accurate figures. So you'll plug in the $19,320 so that you can reduce that federal income that's being withheld, and you keep more money in your pocket every single week. And so the next year, that individual would not expect to be receiving a large refund. Why? Because they were able to leverage, utilizing these documents to their benefit, also legally being able to lower the amount of federal withholdings and take in more money during their weekly, bi-weekly, or monthly payroll. And so this is something that's very, very simple to do, but it's often overlooked. And so I want to make sure that you all don't overlook this, and you go in and you update your W-4. If you hadn't done it for a number of years, by all means, go in first thing, to your office, to your human resource personnel or whomever, to update your W-4. I'm sure you'll thank yourself later and you'll save a ton of money. What you got, Valerie?
No, that's a great point, Brieon, because I think we get so excited at tax time because we're like, either I'm getting money, and some of us are just happy not paying anything. So the blessing, that is a great point, Brieon. And you forget to go back and update that W-4 for the next year so that, you can, like you mentioned, so you can maximize. So I love it. Yes, that's a very good point.
Absolutely. And I think, we can't overstate the importance of really making sure we give people the right information.
Absolutely.
Again, I'll say this, and I said it last week, there's no mystery money out there.
Mhm.
So any income tax refund you're receiving, that's already your money. And so you want to make sure you reduce the amount of your money that's coming out of your payroll so that you can start living and utilizing that money, investing it, putting it into an emergency fund, or whatever you decide is best for your financial situation. You can do that right away. You don't have to wait a year later to, after you had to file a return, after the IRS has kept your money interest
Yes.
free, as well as it's lost its value due to inflation. So you can go ahead and do that right away. So make sure you're trying to reduce the amount of tax refund that you're having. And by all means, if you're able to avoid having a tax refund, then that means, again, you get more money in your pocket. So let's go ahead and jump into the questions. I know there's a ton of questions that were asked. And so I want to start out just with a couple of questions from last week while we're allowing some of the others to get queued up with their questions. And so the first question that we received after our live last week was, can I get a copy or transcript of my Form W 2 from the IRS? And so the answer is yes, you can request a wage and income transcript through the IRS, get your tax record page, or you can use Form 4506T to request a specific tax year's W 2 transcript. So make sure you actually go in, if you need to request a copy of transcript, you go in to the Get Your Tax Record page, or either you utilize Form 4506T. All right, I'm just gonna hit the second question. Then we're gonna allow some of you all to ask your questions. There's a number of questions that were floated in here, so I'm just gonna touch in on the second one, and it's really really important. It talks about, what if there's an error, there's an IRS error in depositing your refund? How do you handle that? So if the IRS actually made an error in depositing your refund, you should contact their customer service. And believe it or not, they actually have a customer service. And so their customer service will assist you with correcting that mistake, which may result in you receiving a paper copy or a paper check. So it could be the mistake is corrected and you still receive your electronic refund through your bank account, or also it could result in you receiving a paper check. Now, this is where you want to go. You want to go to the IRS's toll-free helpline, and they'll help you if you call 800-829-1040, and they'll assist you with any, I said any, federal tax questions. So make sure you take this number down. It's 800-829-1040. And so that's the IRS toll-free helpline. So I see there's a couple of things that we want to get to, and so before we queue up the questions, I just want to give you an opportunity, Valerie. I know we can gain so much from your experience and from your story of just working abroad, being an entrepreneur, just being the ultimate hustler. Like that's how I see you. You're we can gain a lot. So I just want to give you an opportunity right now just to go ahead and share with each and every one of us any insights that you have at this time.
Like I mentioned, keep records. And listen, if you're a homeowner, if you're a business owner, the tax system was built for you. The tax system is your friend. Understand it, learn it, and be very, very, very careful about who you allow to file your taxes for you, to whatever account, whatever CPA you choose. Do your research, and not only just depend on them being the SME to guide you, which is great, but do your own research, understand it for yourself. Tap in every Saturday to Tax Talk so that you can understand it, so that when you get to the office, you sometimes you can assist and say, hey, what about this? What about this deduction? Or what should I do about this? Or it can just help you choose and just say, hey, I don't think this is a good fit. Let me move on to someone else who matches my understanding. So just remember, the tax system is your friend if you utilize it correctly. I know it's scary, but that's rooted in fear. So the more you know, the less afraid you will be, and the easier it becomes. So trust me, it gets better. I think Brieon is on mute.
Can you hear me now?
Yep, we can hear you now.
Okay. Yeah, that's really such valuable insight, Valerie. Like, I've talked to so many different people that have told me that, taxes are just intimidating. Like, they see
Absolutely.
so many numbers, they see so many line items, they don't know where to go. They get, really, really confused. They get really, really worked up and, anxious when it comes to trying to understand. And I think, like you said, sometimes we just have to step back and be able to take it step by step. Very
Absolutely.
similar to the house building process, brick by brick. And when it comes to taxes, that's one of the things the team and we're going to continue to make sure we break this down to where it's in a very common sense, practical language so that every single Saturday that you tune in to Tax Talk Live, you're able to get something that you can implement right away. So we want to make sure that we're giving this to you in a way that you can digest it, in a way that you can comprehend it, in a way that you can understand it. Because believe me, what you just said, Valerie, the tax code was created for business owners. And that's a whole nother realm that we're just, going to be getting in as we go along with this journey. We're still on personal or individual income tax right now. We hadn't yet crossed over into the business side, but you are 100% correct. The tax code was written for business owners and entrepreneurs and investors alike. And so there's so many benefits that you want to make sure you can capitalize on. And I want to also just touch on this, making sure you align yourself with the right CPA, the right tax attorney. That can be worth all the bang for your buck that you're going to be paying them. They're going to pull their weight probably times 10 in terms of keeping up with the latest deductions, adjustments, tax credits, and be able to file your taxes timely and most beneficial for you. In addition to, they're going to be able to assist you with tax planning. So making sure that you align yourself with the right CPA or tax attorney. So no, it's really, really good, Valerie. Thank you for that and valuable insight. So I'll go ahead and jump into another question. And we talked about this last week, and I want to make sure we came back and touched on this. And so someone submitted a question, and the question says, is there an age limit on claiming my child as a dependent? And so, quite naturally, I know last week we just touched briefly on the child tax credit. And so, to claim your child as a dependent, they must be younger. They must be younger than the age of 19. So they have to be under the age of 19 or a student under age 24 by the end of the calendar year. Now, there's no age limit if your child is permanently and totally disabled. So making sure you can claim them as a dependent. Now, there's other cases as well where you're able to claim dependents. And I want to make sure that you consult with your attorney, tax attorney, or your CPA to make sure that you are able to claim and maximize on carrying your dependents, but also you don't carry a dependent that's ineligible. So make sure you do consult with your attorney or tax preparation expert. The next one says, what do I do if I lost my refund check? Now, there's an option out there for you if you've lost your refund check. It says if you've lost your refund check, you should initiate a refund trace. So the IRS allows you to initiate a refund trace or refund tracker through the IRS's automated system. Or you can contact them directly. Again, I provided the number to be able to contact the customer service, and they should be able to help you. Now, I want to give you also another resource to be able to utilize. So if you go to www.irs.gov/FAQs. That's frequently asked questions. So that's www.irs.gov/FAQs. And you'll see a lot of questions and a lot of resources that'll be able to help you and assist you there. Anything, Valerie? You're more than welcome to chime in. We want to get as much from you as we can. As I said earlier, you're our dear sister and a dear, frugal millionaire, and so we know you have a lot of insight. But I want to ask you in particular, what insight when it comes to taxes,
Mhm.
in general, whether it's individual or whether it's business taxes, would you give specifically to women?
Specifically for women, I guess, like I mentioned earlier, the record keeping, especially in business taxes. The other thing that I would mention is ensure that you are getting as many deductions as possible. You will be amazed at what you can deduct. So, men and women, quite frankly, if you're just, hey, let me sit down and find out what deductions I have, learn that and understand that at the beginning of the year, because now you'll find yourself. Keep a receipt for if you are a religious person, or if you're into philanthropy and you give out charity. All of that stuff can be deducted. Even in a business, when you are purchasing a car and you use that car for business. So it's the mileage to and from your business and your office, supplies. I mean, we all buy pens, we all buy notebooks, just a lot of different things, computers. Just I would advise understand and know what your deductions are, because those are your money makers or savers.
Absolutely, absolutely. Now, I know that's very, very, good information. I know when it comes to charitable donations, I mean, that is something that's one of the largest um, deductions that you're able to do. And I know for a number of years, those who do contribute, to different charitable organizations, different approved 501c3 organizations, also different religious organizations, they're able to claim a deduction. And that's a pretty large deduction. I know some time back that deduction was around 50% that they were able to claim of their adjusted gross income as a deduction. So, very, very important when it comes to the charitable donations. And I want to touch on something you mentioned early, Valerie. Um, I wanted to touch on this because I know it's such a powerful, powerful tool when it comes to taxes. And this is for those individuals who, very similar to you, Valerie, who's, worked internationally in the past, or either they're currently working in an international environment. So, the latest, and I just pulled this up on the screen here, the latest from the IRS is that the foreign earned income exclusion allows you to exclude a certain amount of foreign earned income from your U.S. taxes. So for tax year 2023, which we are in tax year 2023, and we're filing those now in 2024, before the deadline of April the 15th of 2024, if you are living in all states with the exception of Massachusetts and Maine. That's April the 17th of 2024. So for tax year 2023, you're able to have an income exclusion amount of, get this, $120,000 of foreign earned income. That is mind blowing. You are able to deduct, you're able to get an exclusion off of $120,000 of your foreign earned income. So just imagine
Yeah.
if you earned $10,000 a month, that's $120,000. That means virtually all of that money is tax free. You don't owe any money, any single penny on that. So that's very, very powerful for those of you who all are working abroad. Make sure you don't leave any money on the table. And so
Oh,
I'm
Brian,
glad. Yeah,
really
go
quick.
ahead.
Really quick. Also, with that, keep in mind there are restrictions on how often you could be on U.S. soil throughout that year. So usually it's no more than 33 days out of that tax year. So just double check because once you go over that limit, then now Uncle Sam is going to tax that 120,000. So just keep that in mind. When it's time for vacation, say, hey, instead of going home, maybe I'll take a trip to Dubai, or maybe I'll go to Thailand, maybe I'll go to Spain or somewhere nice and beautiful. But needless to say, it's still an amazing tax break. So take advantage of it.
Absolutely. I think that's spot on, Valerie. And what you're referencing is basically there's two options when you're working abroad. So there's a physical presence test, and that physical presence test means you have to be outside of the United States for 330 days every single year if you're qualifying under the physical presence test. Now, there's different requirements for bona fide resident status. So make sure you look up both of those to make
Mhm.
sure you understand it and make sure that you are filing the right one because both of those have different advantages as well as disadvantages. And so you want to make sure the one that you're eligible for that's most advantageous and beneficial for you, your actual tax professional or tax preparer is filing it for you. So very good information, Valerie. You are just dropping those gems left and right. I'm so glad that you joined us on the show. And I really need to go ahead and ask you this. Are you going to be joining us in the future? I mean, we really love you to stop by. You have so much information just in, as I said, being an entrepreneur, being the ultimate hustler, working and traveling around the world, and you just have your hands in so many different things. You're sitting in so many different rooms, and I know you're gonna get a chance to tell your story to everyone. But I want to make sure you know that Frugal Millionaires, this is your home. Anytime you want to pull up a chair, you want to stop by, you just let us know and we're gonna have your seat ready for you. So are you gonna be dropping by anytime soon to just bless us with all of this knowledge and experience that you
Absolutely.
have?
Absolutely. I love it here. I enjoy this. I love what you're doing, Brieon. We have a long history of friendship, business, and everything. So I enjoy it. I'm here. You got me. Every Saturday, or even however you need me, I'm here, as always.
Absolutely. Well, I definitely appreciate that. And, that's one of the things I never take for granted, the relationship, the friendship that we've had. And, it's really been a great friendship and well over a decade, to where, those older days where we spent time, actually working together overseas and, just really enjoying and learning and growing and, as young professionals. And so I definitely appreciate you because I know you're so busy. You're super busy. You have a lot going on. You have a very busy life, but a very interesting life. And that's what I'd like for you to continue to drop in and share with all of our folks here. Some of those great things that you have going on in your life that, we all know about. And, it's always good for us to catch up. I'm always happy to see you, whenever I
Same.
can. Quite naturally, we are on different sides of the globe, but I'm always happy to see you. So we're just going to take one last question before we conclude for this week's episode of Tax Talk. And that last question says, is it possible to file an amended Form 1040X electronically? And so the short answer is this: yes, you can file a Form 1040X electronically. Now, if you're amending a prior year return that was originally filed on paper, the
Mhm.
amended return must also be filed on paper. And so I just want to kind of go into this. It's very important, and I want to make sure you all understand what the file, what the Form 1040X is used for and how you file it. So the Form 1040X you utilize that only after you have filed your original return. So you utilize this to make changes. The technical term for making changes is called an amendment. So you utilize this form to amend your original return by filing the 1040 more than you can file it more than once, or you can file it, timely, as long as your original return has been completed. But you cannot file it prior to your original return being completed. Now, generally, for if there's a refund or if there's a credit attached to your return, you must file a 1040X within, get this, 3 years. So you have time to go back, and this is including extensions. So you actually have time to go back and correct any mistakes. So if you left money on the table unknowingly, or it was done by mistake, you're able to go back and file a 1040X within 3 years, including extensions after the date that you filed your original return, or within 2 years after the date you paid the tax, whichever is later. So make sure, very, very important, you understand those timelines. So that was our last question. Before we conclude, I want to say thank you all for tuning in to another, Saturday episode of the Tax Talk Live show on Frugal Millionaires. And, thank you all for stopping by. Continue to come by, continue to bring those questions. Even if it's not during Tax Talk Live, send them over on Facebook, send them over on Instagram, or either on TikTok, so that we can get those questions answered. We're going to be back here, same time, same place, every single week on Saturday at 8 a.m. Eastern Standard Time, every Saturday morning. So I'm going to turn it over to you, Valerie, to go ahead and take us out with any final comments, any final insights that you may have and you may want to leave with all of us.
The only thing that I will leave with you guys is Brieon mentioned something very important. He mentioned the word extension. There's a benefit to extending. I know sometimes tax season is stressful. It is a lot of hurry, 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 hurry before the deadline. But utilize your extension. Take your time. Relieve that stress. That way you can give it a thorough review. Look over it as long as you need to. Take your time, review receipts, find that right CPA to get you to, across the finish line. But absolutely, the extension, use it if you need it. Don't be afraid. Other than that, thank you for having me, and I look forward to next Saturday.
All right, sounds good. Thank you so much, Valerie. It's always great seeing you. And thank you all for tuning in to this episode of Tax Talk Live on YouTube and all of the social platforms by Frugal Millionaire. And so we'll see you all in the next one. And thank you again for tuning in.